Hi, this is Alessio, your stunningly trader. Hope you're well. Before I start this video, let me say this, that this is going to be one of the most important videos I'll ever make on Bitcoin. In fact, I can guarantee that every single person who watches this video to the end, if you watch this video all the way through to the end, I can guarantee you'll come out of it far more informed and far more prepared than someone who does not know anything about this. Okay? Because you see, in this video, I'm going to try my best to mentally prepare you for the worst case situation, worst case scenario, not just in Bitcoin, but in any market. Let me just say this, I don't expect this worst case scenario to actually happen. So even though I'm going to show you the worst case scenario, I don't actually expect it's going to happen. But it is important that we know about it so we can recognize the patterns and so you'll know what to do if it happens. In the words of the famous quote by Louis Pasteur, fortune favors the prepared mind. And as the German philosopher Friedrich Nietzsche once said, that which does not kill us makes us stronger. I think you'll agree with me that when you've experienced something which is terrible in your life, that actually makes you a stronger person. For example, someone who has never experienced bereavement or a death in their family or a loved one is going to be far less prepared mentally and physically than someone who has. It is the same thing in real life and also in investing. Studies have shown that the best airplane pilots are those who are prepared mentally and physically for the worst case situation, for the crisis situations that can happen in an airplane. So that's what you want to become. As the captain or the pilot of your investment ship, if you want to call it that, you want to be mentally prepared for anything can happen, anything the market can throw at you. So again, even though I don't expect what I'm about to show you today, I think it's important that you prepare yourself mentally for anything that can happen, including the worst case scenario. So let's begin. In a previous video, I told you about how 20 years ago, I personally lost a lot of money. Again, this was when I was very young, about 19, 20 years old, and I put my money into a particular market, which eventually, I bought at the worst possible time and it just crashed all the way down. Eventually, my investment went to zero, by the way. Now, the right question is not whether this is going to happen to Bitcoin. I don't expect this is going to happen to Bitcoin. But the question you should really be asking is, how can you prepare yourself for this kind of situation so that you don't fall into this trap? Because this could happen to anybody and in any market. For example, maybe this won't happen to Bitcoin, but what if it happens to a specific cryptocurrency? Or what if it happens to you in a different market altogether, right? So I'm going to show you how you can prepare yourself and avoid this terrible mistake which I myself made about 20 years ago. There are some specific patterns which you can actually look for and avoid that kind of mistake. And of course, this will save you a lot of frustration and a lot of mistakes, not to mention the thousands you could potentially avoid in losses. So let me show you here. And let's go back a bit on Bitcoin here. I want to show you something incredibly important on this chart. You see, one of the key things about a bull market, which is what we've been in Bitcoin for the last, I'd say for the last couple of years, maybe the last year or so. One of the things about a bull market is that the price exhibits three important patterns. And these three patterns are common to all markets when they're in a bull market. Okay? And if you can recognize these three common patterns, this will put you way ahead of everybody else who does not know anything about this. Okay, again, I can guarantee by the end of this video, you'll come out of this far more informed than someone who has no knowledge or clue about this. You see, in a bull market, you'll see three important things. What are they? Firstly, the price. The price is usually always above its 200 moving average. Okay. For example, throughout 2017, Bitcoin stayed above its 200 simple average. Now, here's the thing. Let me explain to you what these moving averages are. This blue one here is the 21 EMA. That's the 21 EMA. The purple one here, that's the 55 EMA. And again, EMA stands for exponential moving average. And the orange line here is the 100, okay? And of course, as I said before, this green one here is the 200 SMA. That is a simple moving average, okay? So let's just get that cleared up. 21, 55, 100, and 200. Notice something also important, which is the alignment of these averages. Notice their relationship to one another. The 21 is above the 55 is above the 100, and the 100 is above the 200. That's exactly what you want to see in a bull market. In fact, that is exactly what you do see in a bull market. In a bull market, when price deliberately moves in the upward direction, what you see are these four moving averages in this alignment. The 21 is above the 55, above the 100, and the 100 is above the 200. And also important is the fact that the price stays above the 200. There is something else also important in a bull market that you see. You see, in a bull market, what you also see is higher lows. Notice this low here, and notice this next low. You see, in a bull market, you see a series of higher lows. Any drops in the market forms lows, and these lows are essentially getting higher and higher from each other. Now, there is one other important factor you should remember when you're in a bull market, which is that it takes no special skill to make money in a bull market. Okay? You could be an 8-year-old child. You could be someone who has absolutely no knowledge of the market, and you could make money in that market. For example, let's say, for example, someone who had absolutely no knowledge of charts, the market, or Bitcoin. They bought it, let's say, for example, right there when Bitcoin was at $2,700, right? Or even here when it was $5,000, near $5,000. You see, in a bull market, what usually happens is any pullbacks, any weakness, any drops, in other words, in the market get bought. So any weakness immediately gets bought. As you see here, when Bitcoin dropped to its 100 EMA, what happened? Buyers stepped in and they pushed it back up higher again. So again, remember, it takes no special skill to make money in a bull market. You could feel like an absolute genius when you're in a bull market, because what happens is the market just keeps going higher. That, however, changes in a bear market. Let me show you. This is the last time that Bitcoin was in a bear market, which was back in 2014, actually from 2013 to 2014. You see, in a bear market, look how different the market is. Again, this is Bitcoin we're talking about here. You see, in a bear market, the exact opposite is true. First of all, you see deliberate movement in the downward direction. So what happens is that any sell-offs, any sort of drops in the market lead to more drops, and any rallies get sold. Look at that. Any rallies here immediately get sold. Rallies get sold. Rallies get sold. Okay? That is precisely what you'd see in a bear market. And notice, by the way, something also interesting. Price, where is price in relation to the 200 average? It's below it. That's the 200 average right there. Look at price. Price remains below the 200 average. Also, notice where the alignment is of the averages, the four averages that I mentioned. Notice that the 21 is below the 55, which is below the 100, which is below the 200. So we have the exact opposite of what you'd see in a bull market. Okay? By the way, in case you're wondering, this pattern is not just in Bitcoin, but across all markets. And this is why I disagree with people out there who say, oh, you cannot compare Bitcoin to other markets. Yes, you can. And in fact, I'll prove it to you. You see, all markets exhibit human activity. And all human activity essentially is controlled by our emotions of fear and greed, by our psychology. So that's why chart analysis is so important, because remember, all charts reflect the expectations, the desires, the fear, the greed of the investors behind them, which is why you see these patterns repeat themselves across other markets. Take a look, for example, this is gold. I wonder if you can remember the great bull market that we saw in gold just a few years back. Do you remember how a few years ago people were getting extremely fanatical and bullish about gold and silver? Well, that's because we were in a gold bull market. And notice how the pattern was exactly the same in gold. First of all, where is the price in relation to the 200 average? It's above it. So that's the 200 average right there. And look at the price. The price remained above the 200 average. That's one of the key signals, the key signs of a bull market. Okay. Secondly, look at the alignment of the averages. Again, as I mentioned before, the 21 is above the 55, which is above the 100, which is above the 200. The alignment in a bull market is exactly like that. Also notice that in a bull market, you see a series of higher lows. Okay, so as when you see these drops in the market, look at the next drop and look at the next drop. Okay, so you see a series of higher lows. That is precisely what you'd expect to see in a bull market. And again, remember, in a bull market, anyone can feel like an absolute genius. All right. But remember, it takes no special skill to make money in a bull market, purely because you have the market momentum pushing in the upward direction. That changes, of course, in a bear market. Here's gold in a bear market. Okay, notice the exact opposite here is true. In a bear market, so you see prices below the 200 average, as you see that green line. And what you see is the alignment of the averages. Again, the 21 is below the 55, below the 100, and so on and so on. And you see a series of lower lows. This low here is below the previous low, and this low is below the previous low, and so on and so on. This is a bear market when you keep seeing series of lower lows. And also notice any rallies fail. Rallies keep failing, get sold. Rallies failing, getting sold, and so on and so on. So that is one of the key characteristics of a bear market. And remember, every market, and yes, as we saw, same with Bitcoin, any market and every market can go into these cycles of bull and bear. So have we seen something like this in Bitcoin right now? No, we have not. For one thing, okay, so the price is below the 200 average, yes. But remember, the price can easily go back above it again. As I explained in a previous video, the price could easily jump and go back above it again because we're so close to it. And also, the moving averages have not yet lined up all in a negative direction. So for example, you see these moving averages, the 55, the 100, and the 21, they're still above the 200 average. So we're not yet in a situation we can say we're in a bear market. Okay? So if you're asking the question, have we entered the worst case scenario for Bitcoin? The answer is no. No, there's no way at the moment that we're entering or we have even seen any signs of the worst case scenario for Bitcoin, which is that we're entering for a bear market. And I don't expect a bear market unless we see those specific signs, those specific signals forming. But I'm hoping what this video has done is prepare you mentally and physically for the worst case scenario in case it happens. And remember what I mentioned at the beginning of this video, which is fortune favors the prepared mind. And as Nietzsche said, that which does not kill you makes you stronger. So guys, if this video has helped you, and if you think it's helped you become a little bit stronger, then please give it a thumbs up. And please remember to subscribe to our videos for future updates. Thank you very much.